So next up, we have Jindalee Resources Limited. Jindalee's ASX code is JRL, and it has a market cap of approximately 60 million. Jindalee Resources has a strong track record of successful mineral exploration and development. The company's flagship project is the McDermit Lithium Project in Southeast Oregon in the United States. Presenting for the company today is Executive Director and CEO, Lindsay Dudfield. Lindsay, welcome, and please take it away.
Yes, thanks, Manny. And look, I do apologise to everyone. This presentation was prepared about 2 days ago. And at our AGM last week, shareholders approved the change of name to Jindalee Resources and the change of ticker from JRL to JLL. This has happened a lot quicker than we thought, and as of this morning, we're now Jindalee Lithium, and we're trading under the ticker ASX ticker JLL. So this will be the last presentation that'll be given as Jindalee Resources, because we are now Jindalee Lithium. So next slide, please. Obligatory disclaimer. So look, a very tight capital structure, 60 million shares on issue, trading, a couple of days ago around the dollar mark, giving us a market cap of 61 million. Cash at the start of November was 4.3. There's another just under $250,000 coming in from directors following the approval of participation in a priority share offer at the AGM last week. There's another just under $4 million in investments, primarily the spin out of our Australian assets, Dynamic Metals, DYM, and also a uranium company, Energy Metals, that was spun out of Jindalee back in 2005. So it gives us an enterprise value of just over $50 million, which is incredibly low for a company with the asset that we've got. I hold about a quarter of the issued capital. I've never sold a share, founded the company back in 2001. And as I said, we've had a few spin-outs along the way, and also paid our shareholders a fully franked dividend on the back of a windfall takeover of Energy Metals. Okay, next slide, please. So look, just a brief touching on the supply demand in the US. We're not an Australian pegmatite story. We are a US focused lithium pure play, and really focused on our McDermott Lithium Project, which is currently the largest lithium deposit in the United States by contained lithium. The deposit, actually, you can see there in the background, it's the low coloured hills. You can also see some old uranium, mercury mines, and the sagebrush in the foreground. That's grazed through the spring by the ranches. So this is a highly degraded part of Oregon, southeastern Oregon, certainly not pristine environment. Next slide, please. So why are we excited about the potential for Jindalee's McDermott project, and why do we think it will be developed? Well, it's all to do with the impending demand for lithium from the battery factories that are currently operating, and more particularly that are being built throughout the United States. You can see there's a graphic of them there. You can also see where our two projects are, but I'm just only going to focus on the McDermott project for this presentation. And in the left-hand corner there of the graph, you can see the benchmark minerals forecast demand for lithium carbonate equivalent, that's LCE, in 2031 to feed all these gigafactories. And they're forecasting that the US is going to need around 600,000 tonnes of lithium carbonate by 2031. The country currently has only got one operating lithium mine. That's the Silver Peak operation in Nevada, owned by Albemarle. That produces around 6,000 tonnes per annum of LCE. So there's a huge shortfall of lithium needed for the United States. There's a big emphasis on the United States onshoring production of critical minerals, and that's where we think these very large low-grade deposits like McDermott, and also our neighbours, Sacka Pass to the south, have a very important role to play in supplying that demand. Next slide. most people now would be aware of the Inflation Reduction Act, the IRA, that became law in August last year. And basically, there's a very large pool of money that's available, government money, to encourage, as I said, the onshoring of critical minerals production, and also the development of battery factories. There's tax credits for consumers who switch from internal combustion engines to EVs. So there's the two main government agencies or departments that are funding a lot of these critical minerals projects are the Department of Energy, the DOE there, and also the Department of Defence. So in January this year, the DOE announced a $700 million conditional loan to Ioneer's Rhyolite Ridge project. That's a lithium boron project that contained lithium in resources around 3.4 million tonnes of LCE. And then in February, the Lithium Americas, who own the Thacker Pass deposit to our south, announced the receipt of a substantial completion notice from the DOE, and they expect that the DOE loan will fund up to 75% of their phase one capex. They also announced a $650 million US investment by General Motors in return for offtake from their Thacker Pass deposit. So there's a lot of money available from US government and also from OEMs that are moving upstream to secure lithium. Next slide. So the project itself, next slide. Sorry, next slide, please. Thank you. It sits at the northern end of the McDermott caldera. That's that yellow dotted line you can see there on the graphic on the right. At the southern end of the caldera is the Thacker Pass deposit. So you're looking here at the two largest lithium deposits in the United States. Thacker Pass, as I said, owned by Lithium Americas, currently under construction. We're a little way behind them, but Thacker Pass, they've got 19.1 million tonnes of lithium carbonate in resource, and we have 21.5 million tonnes of lithium carbonate equivalent, LCE. We discovered this project in 2018. We own it 100%. There are no royalties or contingent payments to third parties or anything like that. Very, very clean title. You can see from the sediments behind me here. That's the mineralized sediments hosting the lithium. They outcrop. They're flat lying. They're soft. Mining costs are going to be very low. So it's a very significant and strategic deposit in the context of the United States plans for electrification. The next slide, please. So this is, you can see on the right-hand side, the yellow is the indicated resource and the red is the inferred resource, together totaling about, as I said, around 21.5 million tonnes of LCE. There's a cross-section through the centre of the deposit there, and that's shown in the bottom left. And you can make out the white pit shell outline. That's Conceptual Pit Shell 6, which is the first 43 years of mine life. And you can see there's a lot of high-grade mineralisation that's still to be captured, both in plan view on the right and in section on the left. Why did we basically have our mining engineers develop these series of conceptual pit shells? Primarily so we could select samples for metallurgical test work, and I'll touch on that shortly. But you can certainly get a feel for the scale of this project from the size of those conceptual pits. Next slide. Last week we announced an exploration target range, ETR, surrounding the indicated and inferred resource at McDermott. Our resource consultant basically looked at a 300 to 400 metre buffer around the resource, and that at the midpoint, that's added another 3.3 million tonnes potentially LCE to the project. Very confident, given the flat-lying, contiguous sort of stratigraphy we're seeing at McDermott, that additional drilling will convert that exploration target to resource, but obviously we need to drill the holes first. In fact, we joke that if we were listed on the TSXV, our yellow indicated resource, a lot of the juniors there would probably call that measured, and the red would be indicated, and the green, the exploration target, they'd call inferred. But we've got a pretty conservative approach to things, and would rather surprise on the upside than disappoint. You can also see rock chip samples from sort of scattered exposures of the sediments out on the western side of the project, and highly anomalous lithium values out there as well. So we're very, very confident this resource is only going to get bigger and bigger with more drilling. Next slide. So Metallurgy, it's no point having the largest lithium deposit in the United States if you can't get the lithium out economically. So that's obviously a major thrust of the work that we're doing at the moment. Next slide. So I apologise for this slide. It's very wordy, and it probably would have helped actually to have a couple of graphs in there. But look, it's very important. So we had Fluor, major US engineering group, review all of our met test work. They've got a couple of hydromets that are very familiar with this style of mineralisation. It's an emerging or unconventional style of mineralisation, sediment-hosted lithium mineralisation. And their review of the met test work that we'd done prior to 2023, prior to this year, determined that by beneficiating the ore and then leaching it with sulfuric acid, we delivered the best financial outcome for the project. They also noted that because of the enormous size of the resource already, there's a lot of flexibility in how it's developed, and so obviously, as it says there, potential to mine higher grades early on in the mine life and improve project economics further. Our geologists have done a fantastic job in conjunction with international research groups that have also been crawling over the project and identified 4 units. You can see them there, 4, 6, 8 and 10, as 4 units that carry elevated lithium grades. And by potentially selectively mining those units first, we can also get an increase in head grade delivered to the mill. So we selected about 700 kilos of core from core samples from those units, 4, 6, 8 and 10, within the indicated portion of that pit shell, Conceptual Pit Shell 6. They were shipped to a metallurgical facility late July, as it says there, and met test work commenced in August. The initial head grade assays from a composite of those units 4, 6, 8 and 10 average 1790 ppm, so they're 34% higher than the average resource grade, which is 1340 ppm. And then we recently announced beneficiation results via attrition scrubbing, which is a simple mechanical process, at a relatively coarse cut of 250 microns, and that also further increased the resource grade over 2,100 ppm, so almost 60% higher than the resource grade. So and also importantly, it recovered 92% of the lithium, and rejected about just under 25% of the mass. So you're concentrating the lithium in a smaller volume of material. So that's very positive for capex for the processing. So we're now undertaking initial acid leaching of that beneficiated sample, and those results will feed into the pre-feasibility study that we commenced in June. The engineering work is running in parallel with the met test work, and also we announced in February an MOU with POSCO, and POSCO we're beneficiating samples for POSCO to also do acid leaching on as well. So running our work in parallel with theirs. Fleur did note that there was excellent potential based on the results to date to improve on those results further, by playing around with attrition, different attrition times, cut sizes. So if we go for a finer cut, certainly on units 4 and 6, we should be able to recover even more lithium from a reduced mass. And also, things like scrubbing the coarser material to remove the clay fraction, which might be adhering to the sand grains, and that clay fraction is the fraction that contains the lithium. Next slide. Environment. So this is a pretty good slide here, actually, because it shows those mercury mines that I mentioned earlier. This is just on the outskirts, on the edge of our claims, not within our claim boundary, but just over the border, if you like. So it shows the twin uses of the area to date, mining, particularly mercury mining, a lot of mercury mines around the northern edge of the caldera in particular, and also ranching. So the ranchers, as I said, run their cattle through the sagebrush, which are these bushes you can see in the foreground, in the spring. And so we coexist with the ranchers and tailor our exploration activities around their activities. So we don't interfere with one another. Next slide. So look, probably the most important line there is the line that's been bolded, and that's that. Look, we've conducted in last year, we completed extensive environmental and cultural baseline studies with no red flags noted, no rare and endangered species, no signs of permanent habitation by Native American, Indian tribes. So we're building on that. We're currently doing a lot of work on the hydrology of the area and so on. And this is important to demonstrate to the community generally that there's no reason, no environmental or cultural reasons why this project shouldn't be developed as part of the strategic supply of lithium to America. Next slide. And just, it's a sediment-hosted deposit. As I said, it's an emerging style of deposit. How do we compare with our peers? And look, you can see the size of the bubble there is the contained lithium carbonate equivalent, LCE. So you can see the two biggest deposits globally of this style of mineralisation, Thacker Pass and McDermott. And then some of the other deposits are shown there. Sonora, that was owned by Ganfeng, that's in Mexico. Unfortunately for Ganfeng, that project has been nationalised by the Mexican government. So that happened earlier this year. I mentioned Rhyolite Ridge Iron here, receiving a $700 million conditional loan from the Department of Energy. You can see they're sitting there 3.4 million tonnes of lithium carbonate in resource. And what I've done here, I've tried to compare all of the different deposits as close to 1,000 ppm cutoff as possible to be fair and, compare apples with apples. The other thing to point out is our market cap relative to some of these other projects, particularly Thacker Pass, because that's in development and obviously, as I mentioned, has received an investment from General Motors and looks like it's going to receive a significant loan from the Department of Energy. And it sort of demonstrates the trajectory that Jindalee will likely follow as we de-risk the project and demonstrate to investors that, look, this project will be developed. Certainly at the moment, I think we're one of the, if not the cheapest lithium stock globally via, if you compare, cost of the value of our LCE and resource. I think we're trading at around $3 a tonne of LCE, which is, well, if you're a bottom picker and you're looking for value, you should have a closer look at us. Okay, next slide. So look, it's been a busy year already. Obviously, we spun out all of our Australian assets via Dynamic Metals, and that's definitely worth having a look at. DYM's the code. We announced the resource upgrade, to take us up to 21.5 million tonnes of LCE in February, and also the MAU with POSCO. I mentioned the review of the MET test work undertaken by Fluor. We lodged an exploration plan of operations with the Bureau of Land Management, the BLM, and that was deemed complete in May. And so that will allow us, once it's approved, to drill another 160 odd holes at the project. So that's to not only convert indicated resource to measured, which then gives us proven and probable reserves for the feasibility study, which will follow the PFS, but also allows us to collect large samples for metallurgical test work, a pilot plant, whatever. The PFS is underway. It commenced in June, and like the MET test work, with both the MET test work and the PFS are being managed by Fluor. We've also got our own study manager who is, if you like, managing Fluor for us, and also looking after the components of the PFS that Fluor aren't focusing on. Fluor are mainly focused on the engineering parts of the PFS. We've started announcing results from the MET test work that's currently underway, and obviously the exploration target was announced last week. And we're continuing to build the team, and you should see some announcements to that effect in the next week or three. We are accelerating our engagement with US government agencies. As I said, there are large pools of money there available for projects potentially like ours, to help them accelerate through the PFS stage and get closer to development. So we're targeting those, and it's all about de-risking the project. As I mentioned, we've done a lot of work on the geology, the metallurgical test work, the engineering studies, the environmental baselines are ongoing, and we're targeting completion of that PFS mid next year. So far on track, on time, on budget. So very happy with the way that's progressing. And we think that'll be a catalyst for a lot of inbound interest in the project, where when OEEs can actually get a feel for how much lithium carbonate this project will produce and over how many decades. Next slide. So look, that's it. And as I said, I apologise. The ASX approved our application to change the ticker earlier than we expected, and ASIC were also very efficient. So we are actually the website's still jindalee.net, but we are Jindalee Lithium, not Jindalee Resources anymore, and our ticker is JLL. Thank you.
Lindsay, thank you for that. You've got a great project there. There's a couple of questions before you go. Just coming back to specifically you've mentioned POSCO and the MOU there. POSCO, a significant player in this space. How important is that MOU with POSCO, and what can we take away from that? I mean, is there potential for someone like POSCO to sort of develop that relationship with Jindalee and possibly at some point be part of a funding solution? Is that a possible sort of avenue or path?
Yeah, look, that's a good question, Manny. Why did we? We've been very selective about the parties that we've, if you like, allowed to have a closer look at this project, and they had to meet three criteria. Yeah, simply, really. First of all, they had to be acceptable to the United States. As we know, there's a lot of geopolitical stuff going on at the moment, and we had approaches from parties who would not have been acceptable to the United States, and so they were ruled out. The lithium carbonate produced by this project will not leave the United States. It will wind up in lithium-ion batteries in EVs, coming off production lines from the various assemblies and or production lines in the United States. So and POSCO has a relationship with General Motors. They're a major supplier of cathode active materials, including lithium, to General Motors. So that ticked that box. The second criterion was that the incoming party had to have the technical capability to develop this project. They, we didn't want to bring in a party who maybe had a great balance sheet, or American corporation, but had no idea, about chemical processing. Because really, this is a chemical processing project. It's not really a mining project. The mining part of it's actually the relatively simple part. It's all about the chemistry set at the back of the mine. And the third criterion was that they had to have the balance sheet to be able to develop the project. So POSCO ticked all three boxes. So, and they were curious about this project. Obviously, the scale of it. If we are able to demonstrate that this project is economically viable, then obviously they're going to be very interested in especially given their relationship with General Motors. They are, I would say, they're effectively doing their due diligence on the project. We're helping them with that, but it's important to stress that the MOU that we have with POSCO is non-binding at our election. So there's no obligation for Jindalee to provide offtake to POSCO, or to give them an option over project equity or equity in Jindalee itself. Look, it's possible that discussions, once all the met test work has taken place, will lead to something like that. But look, at this stage, they're one of several interested parties, and they're the one, if you like, that we have disclosed. We're working very closely with them, and to get them more comfortable with the project. And as I said, we're helping them by beneficiating samples for them. We've already shipped a large sample to them. But not many people understand these sediment-hosted deposits. It's very early in the development of them. In fact, there's not one that's currently commercially operating. The first one out of the blocks is Sacka Pass to our south. So it's important that we work with POSCO to help them feel more comfortable about this project, and that if we can do that, then that may well lead to an investment decision.
Okay, great. And you just mentioned Sacka, which is another question here. So going back to Sacka Pass, can you give us an idea of what the similarities are between the McDermott Lithium Project and Sacka Pass, and what is different between both projects? What are the two?
Yeah, no, that's another very good question. So look, they're both sediment-hosted deposits. But they're not identical. The Sacka Pass deposit, overall, the grade is higher, resource grade, as we saw from the bubble chart, and also the reserve grade is higher still. And that's because they have a mixture of two sorts of clays. They have, without getting too technical, they have a clay called illite, which carries higher lithium grades, but is more metallurgically complex, if you like, harder to liberate the lithium from the illite. And they have smectite, and they are proposing to blend the illite and the smectite in their processing, as they process the ore. We only have smectite, so it's lower grade, but the metallurgical side of it's a lot simpler, and so let's see what happens with the results of the acid test work, and as we optimize the flow sheet, going through the pilot plant process, etc. But so far, the results have been very, very encouraging. It shows you can start with a lower grade deposit, but through beneficiation and through what looks like to be higher leaching recoveries, you can still wind up with a very good project economics. The other, probably the major sort of difference is Sacka Pass is on the Nevada side of the McDermott caldera, and we're on the Oregon side. So Oregon has historically been regarded as not a mining friendly state, whereas Nevada has been. But when we first moved into this area, staked the ground, it was open ground, and people said to us, "Oh, you're mad! You'll never be able to drill in Oregon, let alone develop a project." And that's turned out to be one of these urban myths that we've debunked. I mean, we were there in March. We staked the claims in April 2018. They were granted to us in June. We were drilling by September. And we've continued drilling. And each time we drilled, the projects, the resources got bigger and bigger. We are quietly confident that this project, will be developed and that we will see and be able to demonstrate to, I suppose, sceptical investors out there that will be the case by demonstrating government support for the project over the coming weeks and months. So I suppose it's a case of watch the space, but the two differences are metallurgically we're different to Sacka Pass in a more detailed sense, and also we're in a different state, so we're operating under different regulations, etc.
Lindsay, thank you for that. That was great, and thank you for your time today. Have a great weekend. We look forward to getting you back and hearing about the progress.
Yeah, no, thanks, Manny. And as you said earlier, if anyone's got any questions, we're always happy to respond. And we're very open about this project. We think it's a great project, and we think it's a transforming project for Jindalee.
All right.
Thank you.
Thank you, Lindsay. Have a great weekend.
Yeah, you too. Thank you.